The data shows that fewer companies are being liquidated, despite the fact that many are under financial distress. Liquidations of companies fell by 42 cases, while liquidations of closed corporations increased by 3% during this period. The hardest hit industries were in financing, insurance and real estate. This was followed by trade, catering and accommodation industries. Many of these companies have to deal with unfavorable trading conditions.
At the moment, a lot of the small to medium enterprises are faced with a lot of headwinds. So load shedding is a major factor. For 2023, we have had load shedding for every day of the year so far. And the costs that come with mitigating load shedding are quite high, especially for small to medium sized enterprises. If you have to purchase a generator, the generators are not cheap, and also the cost of running the generator, diesel expenses are quite high on if you have to run your generator on a day-to-day basis. That's number one. Secondly, the economic environment, the trading environment is not that conducive. We've got higher interest rates, so the cost of borrowing and the cost of servicing business loans, if you've got, are quite high. And secondly, we've got high inflation, and hence we've got the interest rates that have gone up. But we're also in a low growth environment, and coupled with that, higher unemployment numbers. So if the economy is not growing, it means as an enterprise, your consumption base is shrinking.
Of the 81 companies liquidated, 74 of them were voluntary liquidations. Economists have cautioned that these are early days of the year and that many companies will continue to face huge economic challenges.
Quite a surprising, I would almost say positive outcome. However, I want to caution that, this is early days for 2023 and we remain with an exceptional, challenging economic environment. If you look at harsh load shedding, high production costs, high fuel prices, the list goes on, elevated interest rates, demand, that's moderating in the economy. So there are so many headwinds for companies that I think this year could be a difficult one. Again, after we've seen in 2022 that compulsory liquidations increased by 35%.
Analysts warn that if the current intensity of rolling blackouts continue, along with high interest rates, the rate of liquidations might increase during the course of the year. Naledi Matlapeng, SABC News, Johannesburg.